What happens to what? Peak oil? Peak oil's a myth. That's the easy answer. It was a mythology 10 years ago. I wrote about it. I kept saying it's silly. And it's silly, just as silly today as it was 10 years ago. Now, will fields run out? Yes, we'll find more oil. There's lots of oil and gas all over the world. Now, will oil be $20 a barrel 15 years from now? No. I mean, I think oil will become, and energy will become over time more expensive, but we're not going to run out of oil. They found a field in the Permian that we've been drilling for 60 years in Texas, 70 years now. They found a field that they now believe is the second largest oil field in the world, behind only one in Saudi Arabia, that they're just now starting to tap. I mean, when I read these peak oil guys, what they are is they're doom and gloom on humanity. They don't think we can think our way out of a hat box. They're just negative human beings. Now, Humboldt's curve is right. Those big fields are going to deplete. Absolutely they will. We just find other ones. There's plenty of them. Oh, and is there a bear market starting? I've been trying to tell people now for 5-6 months you need to be hedged. So I've done 3 or 4 letters on valuations. I mean, can we? There are two types of bear markets. There are the bear markets that are annoying but are over relatively quickly, and like 1998, 1987. And then there are bear markets that are accompanied by recessions, and those are gut-wrenching and takes 5, 6, 7 years to recover. Those are the ones you want to avoid. Now, the outside the box that I'm sending out tonight is going to talk about my friends from GovCal. Their recession indicators are beginning to trigger in the United States. And I do know that we've got a bull market in complacency. And I'm somewhat complacent, which worries me, because I'm not a complacent person. And so my antenna is up when I'm seeing people like GovCal who are normally very bullish and want to buy everything they can get their hands on. When they start talking about, some of these indicators are beginning to give us early warnings. And if we've watched for the last month, every manufacturing index in the United States, regional index, is turned down. We'll see what happens tomorrow morning. We're going to see the employment data doesn't look like it's going to be good this Friday. The U.S. could be entering into a period of slower growth. And if it does, yeah, we could see a bear market. And if the U.S. has a bear market, so will Canada. So that's why I'd be, if you're in equities, you've got to have some kind of hedge, unless you just, I've got a biotech stock. I think it's down 40%, 50%. I don't care. I'm not going to even think about selling it until January of 2018, because that's when the study will have come out, or in December of 2017, that will tell me whether the stock is going to 0 or it's going to go up 10 times. So I'm holding for the 10 times because I'm got my fingers crossed. Actually, it'll be a lot more than 10. And so it's to me, it's not really a stock, it's an option that I've bought, and it'll either do something or one or the other. So I'm not going to sell that trying to hedge it. I'm not interested in hedging it. But I have other assets. Yes, I try to be very hedged in my portfolio.